So, with all the excitement surrounding the new Tesla Cybertruck and the new Ford Mach E SUV, a lot of people have been asking me to give my updated thoughts on Ford stock as a long term investment, considering that it has crashed by so much, leaving it with a dividend yield that is currently sitting at over 6%, which is very attractive. Well, as you guys know, I am actually a Tesla shareholder myself, but while I have never owned Ford stock, I feel like I've actually been one of the least bearish people on it because I have actually considered investing in them in the past because of the very low valuation and the very high dividend. Of course, that doesn't excuse bad performance for them as a company, but to be fair to Ford, they have actually been investing very heavily in electrification, and they're looking to offer more electric vehicles in the future, which may actually help turn things around for them as a company. So in today's video, I want to talk to you guys about the company, the business, the stock, why it's been falling, and whether or not they can actually recover in the future with the initiatives that they've kind of been taking recently. And of course, we'll also talk about that very attractive dividend. And I'll let you know if I plan to buy Ford stock myself anytime soon. So with all that said, I hope you guys enjoy this. Let's go ahead and get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. All right, let's go ahead and start with a quick rundown of the company, and we'll kind of just go from there. Now, obviously, they're known for designing, manufacturing, and servicing a range of different cars, trucks, and SUVs across the world under the Ford and Lincoln brands, while their mobility segment focuses more on services like autonomous driving and transportation-related services, which, by the way, I think their mobility segment should not be overlooked, as cities will only become smarter in the future, and it's probably the right move for them to invest heavily on these higher margin services now before the market becomes overly saturated and it's too late for Ford to adapt. But when looking specifically at their vehicles, the two that they are probably most well known for are the Ford Mustang and the Ford F-150 truck. In fact, the F-150 has been the best-selling vehicle in America for over the past 4 decades and is still running strong in the lead. Now, it's true that Tesla just unveiled the Cybertruck, which they showed off as beating the Ford F-150 in a tug of war, and on Elon Musk's Twitter, he has a pinned tweet right at the top saying that it's a better truck than the Ford F-150 and faster than the Porsche 911 in what are clear attempts to show that the Cybertruck is a better alternative than America's best-selling vehicle. But I wouldn't go as far as to say that this is straight up an F-150 killer. Just like I think that it's stupid when people throw around the term Tesla killer, I think it's equally dumb to say that the Cybertruck spells absolute doom for the F-150. In my opinion, there's plenty of room in the market for healthy competition. If we look at the US market, the second best-selling vehicle segment is trucks, and the 3 best-selling vehicles in general are also trucks, so there's plenty of demand. And by the way, the traditional truck drivers of the country are not going to be easily converted into Tesla lovers with the radical design of the Cybertruck. But as I mentioned in my 10 reasons why the Cybertruck will sell like crazy, the Cybertruck doesn't need to appeal to just truck drivers. It's a vehicle that will likely convert SUV drivers and even sedan drivers because of its hybrid looking design, coolness factor, and amazing performance for the price. In other words, the F-150 will be fine and the Cybertruck will be fine. The real concern for me is whether Ford can actually adapt to a market that becomes more electrified in the future. But we'll talk more about that in just a second. First, let's take a quick look at the stock and see why it's been dropping. Well, in the past 5 years, the stock has crumbled by over 40%. Technically, they did rebound a little this year, climbing by close to 20% so far in 2019, but that's of little consolation to anyone that bought the stock for nearly double the price and has had to watch it crash for several years. On the bright side, this has at least left them with both an attractive valuation and dividend, as their Ford P ratio is over 60% cheaper than the sector, while their PEG ratio is also also about 50% cheaper as well. Their dividend has also reached mouthwatering levels of over 6.6%, while their payout ratio is still hovering near reasonable levels when compared to their cash flow at less than 50%. Although it doesn't look like it's been growing in recent years, not to mention that around the time of the last recession, they actually cut that dividend entirely and didn't pay one all the way from 2006 to 2010, if Seeking Alpha is correct in their reporting. That's not exactly comforting when you consider that we're currently going through one of the longest economic expansions in history, and everyone keeps screaming and begging for a recession to happen any moment. During those most difficult times, automakers tend to be some of the companies that get hit the worst, and my guess is that you'd likely have to kiss that dividend goodbye once that happens. So you'll really need to have an iron stomach to last through it and not sell your stock for a loss if we actually go through a recession sometime soon. But before I can give my final judgment on the stock at today's prices, we got to take a quick look at the different reasons why the stock has been crumbling thus far and whether or not Ford can actually turn things around in the future. So let's quickly do that now, and then I'll give my final conclusion on the stock right after. Okay, well, if we look at their sales over the years, we can see that sales really plummeted during the last recession, and they really struggled to get back to those pre-recession highs ever since. In fact, their sales are actually expected to decline this year, and even by next year, they'll still be around $10 to $15 billion shy of where they were over a decade ago. In other words, Ford has literally no growth going for itself, and that's why the stock has crashed. To their defense though, it's not entirely their fault. If we look at United States total vehicle sales, we can see that there was some inevitable growth after the last recession, but in recent years the US auto market has been completely stagnant. And the story is pretty much the same overseas, as global auto sales have also plateaued in recent years and actually declined in the last two, which is a result of the slowing global economy. But keep in mind that this isn't even during a US recession, which, by the way, the US is currently Ford's largest market, yet their wholesale numbers have been dropping for years, including the last three. And obviously things have looked just as bad in those international markets that are seeing huge declines in their economies, as their wholesale numbers were cut by nearly half in China last year, while they also declined a bit in Europe after having seen some much needed growth. Also keep in mind that ride-sharing platforms like Uber and Lyft are making it less necessary to buy and own your own vehicle, and that market in the US continues to grow by billions of dollars a year, further eating away at the overall automobile market. So given that Ford is such an already well-established player in the market that again has not only plateaued but is actually declining, it's ultimately made it very difficult for Ford to find any growth in sight. And so if you're more of a growth-oriented investor like myself, yet you want some exposure to the auto industry, then you must be asking yourself, okay, well, where am I supposed to look to find some damn growth? Well, the obvious answer would be electric vehicles. In fact, most analysts are projecting that market share for ICE vehicles will only continue to get smaller and smaller while the share of EVs gets bigger and bigger. It's even estimated that within the next 2 decades, EV sales will actually surpass that of traditional ICE vehicles, which is pretty crazy to think about. As a result, while Ford continues to see declines, Tesla has actually seen their sales skyrocket in each of the past 3 years. So what exactly is Ford doing to adapt to this changing market? Well, for starters, they launched an $11 billion initiative last year to invest in electric vehicle development, including a new partnership with Rivian, who is famously known for their upcoming R1T electric truck, as it's looking like Rivian will build an EV for their Lincoln brand. But on top of that, Ford is already working on an electrified F-150 that will likely sell well because of the F-150 brand, but they're also set to launch a Mustang Mach E electric crossover in late 2020 and early 2021 that will likely compete with the Tesla Model Y. And that should also sell very well, considering that the crossover segment is by far the largest in both the United States at almost 40% and globally at 36%, and it will only start for about $44,000, and that's not even including the $7,500 tax credit. However, there's a couple of issues that I've seen a lot of people bring up, and one would be that it doesn't seem like Ford has a clear plan of reaching full autonomy autonomy with this vehicle like you often hear from Tesla. It does seem like they have some kind of assisted driving, but I'm not very familiar with Ford myself, so I'm not really sure what that looks like. But another issue that I've seen a lot of people mention is profitability, because while their EV is actually cheaper than the Model Y by about $4,000, if not more, when including the tax credit, the Model Y actually starts at 300 miles of range, while the Ford starts at either 210 if you do all-wheel drive or 230 if you do rear-wheel drive, despite being a similar battery size. So something that a lot of people have been mentioning is that their batteries are not as efficient as Tesla, and they don't actually build their own battery packs either. So they have a cheaper price, they have less efficient batteries, and they don't actually build their batteries themselves. So that could be weighing on their profits. Now, Ford did claim that the Mach E will actually be profitable immediately following release, but that's only if you do not include research and development and the costs associated with building a whole new production line, which is what they're doing for the Mach E. So while I do think that this move is necessary for Ford, and it's exactly what I'd want to see if I was a shareholder, it still means that profitability is probably going to be rough for them. Keep in mind that these Ford EVs will undoubtedly be pulling customers away from their higher margin ICE vehicles, and that's ultimately going to continue to weigh on their profits even more. As a result, their EPS is actually expected to be negative even throughout the next 5 years, after already being expected to drop by over 40% this quarter, 9% next quarter, and almost 5% for the year. And while I've certainly seen much worse balance sheets out there, as their current assets can actually cover their current liabilities, which is a good thing, and they would still have about $17 billion left over even after that, they still have another $100 billion of long-term debt that isn't going to be easily to take care of in the future, especially when they're investing so heavily on electrification. Okay, so here's my conclusion. When I look at the whole picture, I just really see a company that is in kind of a panic mode because they're trying to adapt to the changing market before it's too late. And look, that's okay. If you're someone who is actually interested in investing in the company, or you're already a shareholder, that's exactly what you want to see. You want to see them actually fighting to survive. But you also have to be realistic about your expectations, because changes like this, especially such big ones, don't just happen overnight. They take a lot of time to really go through, and all the meanwhile, it's probably going to be a very bumpy ride. Again, they're already struggling right now, and that's with the US not even being in a recession. So what exactly is going to happen when their biggest market actually goes into a recession? And all the meanwhile, they're actually trying to sell EVs that they're not even making a profit on, and that are also cannibalizing their higher margin ICE vehicles as well. That's where you really start to run into some deep fundamental problems. And that's not even mentioning the rise of ride-sharing platforms like Uber and Lyft, not to mention robotaxi fleets that we know Google and Tesla is very interested in attacking that market very aggressively as well, and they're investing a lot in it. And when looking at Ford, we don't really know what exactly is going on with autonomous driving. They seem to be investing in it with their Ford Mobility segment, but we've yet to really see any cars actually come out with autonomous driving kind of capabilities. So that'll be interesting to watch as well, if they can really make any progress in autonomous driving. And again, I'm probably someone who is much more optimistic on Ford than most other people. I do still think that they will be able to survive and adapt to the changing market over the long term. But as someone who is much more of a growth-oriented investor, I just don't really see any growth happening with Ford right now. And even in the future, with the growth that I think they will see in EVs, I think that will also ultimately hurt their ICE growth as well. So it's really just kind of a mixed bag. Now, if I was someone who really believed in the company, and really just kind of was very attracted to them long term, then right now would seem like a good time to buy the stock because of the valuation and the dividend. But I'm not even convinced that that dividend is exactly safe, because Ford has shown a willingness to cut it in the past. And if we run into a recession where funds are drying up, and yet they still need to invest heavily in electrifying their vehicles, which is very expensive, and they will absolutely have to keep doing that because the market is changing rapidly, then that dividend becomes a drag on their funds, and I wouldn't be surprised if they have to end up cutting it. So while I am still someone who again, is a little optimistic on Ford, and I think they'll be okay over the long term. But because they don't have much growth, and because I'm not convinced that the dividend is safe, and because I also don't want too much exposure to the automobile sector, and I already have a lot of exposure through Tesla, right now still just doesn't seem like the right time for me to be buying Ford stock. But I will continue to watch it. It's definitely a stock that's on my radar, and who knows, maybe at some point I will actually invest in them if I see that their EV sales actually perform well, the market accepts their EVs, and they actually lead to some profitability. But I would really need to see those things really start to happen before I'm willing to invest in this company long term, because I still think that it's going to be a bumpy ride in the kind of short to medium term. So anyway, that's just how I feel about it. Let me know what you guys think down below. Leave your thoughts in comments, and let me know if you're invested in Ford, or if you're thinking about it, or if this is a stock that you will just like refuse to touch. Anyway, thanks again for watching. If you enjoyed the video, make sure you hit the like button. It really means a lot to me, and I'll catch you guys in the next one. Take care. Bye-bye.